Is a trade tit for tat. China this morning is accusing the United States of bullying tactics and blackmail after President Trump threatened to slap additional tariffs on hundreds of billions of dollars of Chinese imports. A Chinese Commerce Ministry spokesperson saying in part, quote, "We oppose the act of extreme pressure and blackmail by swinging the big stick of trade protectionism." But the president showing no signs of backing down on tariffs on China and other countries. Watch.
We have been ripped off by almost every country on earth, our friends and our enemies. And I hate to say it, our friends do a bigger and better job than the enemies. But those days are over. And even before we finish off with the trade deals, and we will finish off with the trade deals, people don't realize we have the cards. Because we're the piggy bank that everybody was robbing for 30 years. We're like the piggy bank. Let's go get some more.
Markets, meanwhile, in the U.S. showing signs of stabilization this morning after a sharp sell-off earlier in the week on trade tensions. Though the Dow did close down yesterday, the technology-heavy NASDAQ posted a record close. We had stocks like Amazon, Facebook, and Netflix all closing at all-time highs yesterday. Joining us right now is Joel Shulman. He is EShares CEO and CIO. Joel, good to see you. Thanks so much for joining us.
Good morning.
What are you seeing from investors this morning? Are they concerned? Are they understanding what President Trump is trying to do? Are they thinking that this is a negotiating move?
Well, the last couple of months, we've actually seen a lot of money pour into U.S. small caps in particular. I mean, they're up close to 20% in entrepreneurial companies, about 25% year to date. So the markets seem to be passing aside concerns about trade, concerns about, negotiations with China. And we've seen markets, we haven't seen this since 2009 in terms of the sort of appreciation we're going to small caps. So there's a lot of good news in the markets separate from the trade negotiation discussions.
So I want to be clear on why you think this is rising. The small caps are rising because people think they're less exposed to international trade, or just because they think there's a great growth story among those companies?
I think it's the latter. So when you think about the Dow Jones, and we're going to talk about maybe GE, the GE's been negative, down 25% year to date. They have negative growth. The Dow is close to 2% year to date. They're doing very little. So when we think about...
And these are largely international companies. I think that's what James is saying. Are they impacted by the trade story?
Less so. You're absolutely right. The small entrepreneurial companies less so affected by international trade. And I think there's a sense that this is a long time overdue, the trade discussions that we have.
Yeah, but you think about it, I think we're way ahead of ourselves here on a trade war. They're talking a lot about trade war stocks like Boeing and some of those, Caterpillar and so forth. And I didn't think we're in a trade war yet. I mean, I think we're overreacting. You saw the other...
I think it's a trade dispute.
I think
that's what Peter Navarro calls it.
Listen.
China thinks it's a war, though. So again, if that's your enemy, then you have to pay attention to the way that your enemy is treating us. And I argue with the enemy thing. They've been a great partner in some ways.
This president's been in office now for over a year. We know he sets outrageous goals and statements. I grew up with Jack Welch doing the same thing inside GE.
Really?
He set outrageous goals. You'd come more than halfway across the table. He ends up with more than he would have if he went in 50-50. I think, Trump is a reasonable guy.
But
he makes some outrageous statements.
To compare Jack Welch to Donald Trump.
I will
negotiate.
Raise this, though.
Yeah, negotiate, right?
But this I found to be comedy coming from a Republican president. Yesterday, it wasn't in the rally last night. It was in some earlier remarks he made. He was bragging about the amount of money the Treasury would take in from the tariffs. Wait, take a look. Take a shot of James when I say that. Bragging about the money that the Treasury is taking in from tariffs.
It's a sales tax on imports.
It's a sales tax. Yeah. You had the President of the United States crowing about, we're taxing companies and bringing it into the Treasury.
He didn't expect that.
Okay, but one thing that was kind of cool about those remarks is that he said it's going to end soon. So do you think that's the market calculation now? And Bob's talking about, we haven't gotten into a full-scale war. Do you think people expect this negotiation ends very soon?
I think so. I think the market is largely discounting the impact in the long term. And to your point, I think the market may be getting a little ahead of itself in terms of some areas. I mean, we're seeing a movement towards risk capital in the U.S. market. First of all, the money is coming from international to U.S. So we've had $25 billion flow in just June alone into U.S. markets.
From where?
From just funds flow. So I'm not exactly sure.
Okay, so
but international flows have gone down. and U.S. Equity flows have actually gone up. And so I think much of that must be going into small cap. We're seeing, by the way, the FANGs. It's not, I mean, when we think about GE versus the FANGs, I mean, the FANGs are running 15 times the volume of most S&P companies. They're doing about $4.3 billion a day. Yeah. So the markets are generally going after growth in this market, which you normally don't see in a nervous economy. They're going after small caps and actually micro caps, too. So we're seeing a lot of movement going into U.S. markets and risk capital.
Russell 2000 index hitting an all-time high earlier this week.